Welcome to the weekly swing low. It's August 3rd, 2025, and we have an important update this week. Last week we didn't have an update. It wasn't super eventful. We did make new highs, but this week it looks like we're starting the weekly cycle decline. That's important because it means we're either going to get a bullish false breakdown, right? Like, and so it'll be a long opportunity, or we get a more protracted decline, which still means there's a buying opportunity coming. So either way, this is important. It's going to be an opportunity. So let's start with SPY, ticker SPY. Looking at this daily chart, this is your Thursday candle, and I sent a tweet about this. This was right before the jobs report. We had a bearish outside daily candle, right? It made a new all-time high, went above the high from actually the previous two candles. Like you see these two candles, this candle goes above the high of both of those candles, but then also makes a new low below the low of those two candles. Pretty vicious stuff. And then we get a gap down the next day because we had the jobs report on Friday at 8:30. So big gap too, like more than $4, right? Almost a $5 gap actually. And then we close with a little wick on Friday, so try to rebound a little bit. But that creates some incredibly clear levels. So first of all, for SPY, and it's the same pattern across SPY, QQQ, DIA, IWM, there's just different levels. But I'd say not exactly the same pattern, but very similar. First off, you have a huge gap. So for SPY, that gap is between $626.29 and $630.77. So makes it very clear. If we can get a break above 626.29, $626.29, that means we could close the gap to the upside, even if we're going to roll over and have a bearish rollover, right? Like imagine, you could even see a world where you get something like this, right? Imagine a candle like this, right? Even if the next candle after that does something like this, right? Like now, again, this is not a prediction, but like imagine a scenario like that, right? Like that would be vicious, right? Like this makes this higher high, and you're like, oh, we closed the gap, and then it comes in the next day and breaks down below this, right, to continue the daily cycle decline. Now that's the key. We Thursday was the daily cycle high. That's where we made the new all-time high. And then we close. And then on Friday we had this gap down, and so we now have a swing high. That swing high very clearly is active below $630.77. So that's the top of this gap. That's why this is a really interesting situation because again, we could have a rally all the way back to the top of this gap and then still get rejected, which is what you would expect to see if we're going to continue the downtrend. The catch is this top is happening on day 46. So we're already super late in the daily cycle. I mean, if you stretch back, you can see, right? Like this was a 30-day rally, 19 days, 29 days, 25 days. So a 46-day rally is a very long rally. And you can argue, well, what about this little drawdown here? Sure. That even if you count the rally from this gap here to this top, it's still 26 days. So either way, we're on the long side. And so that means two things. One, daily cycle decline has begun, right? We have this giant swing high on the daily chart, but it also means we're probably not going to decline for super long on the daily chart, right? We're probably going to get a bounce relatively soon because it's so late in the daily cycle, as opposed to like a decline like this, right, where we top out on day 8. I mean, this we didn't decline for that many more days, but it obviously made up for it in terms of like the magnitude of the drop, right? Look at this one where we top out on day 25 and then we continue to fall until day 41. So my expectation would be that we actually get a rebound here in the next week, right? Like think about a 50% retracement of this move from here to here is just a little bit below here, like right there, which makes sense, right? You can kind of see this pivot right here is just calling out to us. That's $618.05, right? You can just, it's very clear that's the next place price wants to go. And think about how many stops are probably set somewhere around here, somewhere below there, that price wants to do something like this, right? Boom, fake everybody out, and then go go the other way. The catch is, imagine something like this, right? Where you're like, oh, okay, we're back. And then it's like, no, we're not, actually. We are not back at all. That was a fake out, and we are going to continue this vicious decline. Again, these are not predictions. These are things to watch out for so that you don't get caught buying a lower high. At the same time, I would expect 6 months from now, the market's probably higher. And so this is, you want to try to catch a buying opportunity, right? Maybe we get something like this, and then we finally resume back up. And we'll talk about what timing might look like. Maybe coincides with the next Fed meeting or something like that. So that's the daily chart. So very clear line in the sand. If we like zoom in to like a 15-minute chart, get really tactical, how the day closed out. Okay, so we had this big gap down. So this is the candle that starts the day. The candle that opens at 9:30. These are 15-minute candles, and you see it just went down, then made a lower low the next 15-minute candle, and then we tried to bounce. Right, you see this little hammer. But then it just kind of cruised along the bottom. It did bounce a little bit. Then we went on to make a new lower low down here. And so, like, basically, this whole thing here is like a gigantic bear flag of this move down. Or really, you can just, like, almost just imagine really that this is just one candle, right? Because it basically is, right? You just have a gigantic gap in price. But this whole price action is just a bear flag of this move down. And so, very clear. Price wants to get back to around here. Again, that's the start of that gap. But before it does that, price would need to get above this pivot here. So tactically, price needs to get back above $623.08. That's the immediate line in the sand in terms of for any rally to work. So that's your like zoomed in levels on SPY. But if we zoom out a little bit and we look at the weekly chart, we are on week 16. And so this is important. Not only do we have a daily cycle decline, but this is probably also the weekly cycle top. We can see this one topped on week 17, this topped on week 13, this one ran a little bit longer, week 22, this was week 19. When you get it, and to be clear, we have those two big red candles on Thursday and Friday turn the weekly candle into a bearish outside candle. Like you can see, we made a higher high above this candle's high, but then closed as a lower low below the low of this candle, which was $626.19. And so this is now a weekly swing high as well. And it's very clear. The low of this candle is $619.29. If we close next week below that, then you know the weekly cycle decline has begun. The catch is we could get a bottom in a few weeks, right? Like it doesn't have to, like, because it's already week 16. It's not like this top down on week like 5, like this, for example. And if we think about when we would expect the next Fed meeting, that's around the middle of September. So that would take us to week 23. Again, not a prediction, but you could see a world where we get a weekly cycle decline into that week of the Fed meeting, and that's where we get our bounce, right? Because the market is throwing a tantrum over thinking there's not going to be a rate cut. And if you think about the 50% retracement of this whole move, and to be clear, this whole move has been one weekly cycle rally off of the big low on April 7th from the Liberation Day decline, right? Like you had this 7-week decline, right, from the week 5 top to the week 12 bottom. And this is, obviously a very irregular weekly cycle. You could almost argue this whole thing is one weekly cycle. It's semantics at this point, doesn't really matter. The point is, this was all one big move where we rallied. What's the move? We rallied 33% and about 160 points, right? And so a 50% retracement would bring us down 80 points, right? That would be right below this gap here, right? Like that would make a lot of sense. I don't know that we get all the way down there. I mean, that would be like a 12%, almost a 13% decline, but that would still be totally healthy. And again, we do have this gap on the weekly chart that like feels like it could need some filling. And that gap on the weekly chart is between 575 and 568 in that neighborhood. So that's SPY. And as I said, the pattern is basically the same for all these other ones. I'll just tell you what the actual levels are because that's the difference. For QQQ, that gigantic daily gap is between 559 and 563.87, right? So that's your line in the sand there. And if you zoom into the 15-minute chart on this one, the pivot we need to get above is $555.36. Until it can get back above that, there's really no rally, like literally no rally possible. Like you can see that just visually, right? Like price has to get back above that, right? You have to see something like this before you can see any upside on the higher time frames. You're gonna have to get something going on this lower time frame. And same thing. Week 16, we have a big bearish outside weekly candle for the Qs. That low on the weekly chart is $551.68. So that's your line in the sand. Below that, you have a weekly swing high in place. All right, so that's QQQ, and then DIA. So DIA, that daily gap is between $437.76 and $440.50. And on that 15-minute chart, that pivot you've got to get above is at $436.56. And on the weekly, this one actually didn't make a higher high, so it's not a bearish outside candle. But as we talk about a lot on this channel, if you combine the last two candles for the last 2 weeks, and then you compare those to the previous 2 weeks candles, it is a bearish outside weekly candle. So if I flip this to the 2-week chart, yeah, it's different. But the point is, it's important to see that. Like, you need to kind of almost deconstruct candles in your mind. Just like this range, the combination of this candle and this candle takes out this range. And so it's the same behavior, right? Fake out, false breakout, excuse me. Higher high that can't hold, and you get a lower low. So for this one, the swing high is active below $442.84. That's your swing high level. But the low of the week was 433. So price could rally all the way back to that 442 level, thereabouts, and then kind of bump its head on the ceiling is what you might expect. That's the Dow. And IWM. So remember, IWM has not made an all-time high the way the other markets, the other indices did. And for this one, it actually, let's go back to the Dow, because that's just an important thing to acknowledge as well. S&P and QQQ, or I should say SPY and QQQ, they had their daily cycle high back on Thursday. For the Dow, its daily cycle high was back on the previous Wednesday, so July 23rd. So the daily swing high for DIA has been in place for more than a week, and that's active below $446.35. And it's a similar pattern for IWM. So that swing high active since July 23rd, and that is below $224.07 on the daily chart. For IWM, the daily gap is between $216.56 and $218.88. We do have a nice lower wick on that daily. If we zoom into the 15-minute, it's all the same pattern. In the case of the IWM, it's actually been consolidating at the upper end of the range on this 15-minute chart on Friday, as opposed to the bottom end of the range, which is what we were seeing from SPY. Nonetheless, the pivot we need to get above is $215.86 on this one to see any chance of a rally on the higher time frames. And again, note that for this one, for IWM, it didn't make an all-time high yet, so it still needs to. So the other indices were able to make an all-time high off of this April 7th low. This one fell short, and so I expect this next rally will probably take us back to all-time highs. So again, catching that next swing low could be very profitable. For this weekly chart, the weekly swing high is active below $220.66, but the low of the week is $212.34. So quite a bit of distance below. So again, similar thing to the DIA. We could rally all the way back to this point here and kind of bump our head on the ceiling. So you want to watch out for that. So let this weekly cycle decline play out. That's IWM. All right, we're gonna move faster now. SMH semis, pretty much same pattern as IWM. Friday actually closed kind of green. That's interesting, right? So the low on Friday is $279.19. And we actually don't have a gigantic gap the way we do for the other indices because this one actually managed to rally back and fill that gap. That tells me there are some buyers in here. And on this 15-minute chart, this one basically needs to get back above $284.89 for a rally. And to be clear, it is also possible that the low it was set, like the daily cycle low just happened on Friday, and we're gonna rally from here. So be prepared for that. And I say that that's across everything, right? Like, so to that point, if we go back to SPY, if we could get a close for SPY, for example, on Monday, if we can get a close above $626.34, right? Like, something like this, that's a swing. That's a swing low, right? Like, it's entirely possible that this is the extent of the decline, especially as you see the other indices. They've already been declining for more than a week, so they're deeper in the daily cycle decline in terms of time, whereas SPY has just kind of held up. It's been the stronger one, and QQQ for that matter. So that's important to watch as I'm looking at SMH kind of fighting back. Really interesting. So for SMH, a close above $286.94 would be a daily swing low. So you want to watch for that. Something like that. Once it crosses above there, whoop, that's your go signal. We're going back to all-time highs and new price discovery. And again, remember, we just had a very credible long-term bottom in April for semis for SMH. SMH has been declining since July 2024. That's important. So I'm watching this one like a hawk for the buying opportunity. And on the weekly chart, we have a bit of a doji that is a bearish outside weekly candle. This candle has a low at $279.19. That's SMH. All right, let's move on to Dixie. So Dixie is showing a big bearish outside daily candle on Friday. Yikes. By closing below 99.52. And it looks like that is the beginning of a daily cycle decline. On the weekly, we have this swing low on week 11, and then we have this little rally, which looks like it's about to end. So look at this upper wick. What we need to see next week is a close below 97.49, right? So something like this. And that would tell you that this is just a continuation of this weekly cycle decline, that this low was a pause. This is your lower high. And now we're going to make a lower low below this low, which would take us below 96.38. That would be my expectation, not my prediction, but my expectation, that this is our lower high. This is our failed rally off of this low here, essentially. That's Dixie. And again, because we're getting the start of a daily cycle decline, that tells me this move on the weekly could have some legs. And on the monthly, that turns the monthly red. And you can see this is all just a bear flag of this so far until it proves itself otherwise. So that's Dixie. The U.S. 10-year doing something important here. So it's week 17. And remember, what this thing has been doing is just kind of consolidating since it topped out on week 7. Right, which is just a slight higher high above the high from the first week. This is the same week that the market bottomed, right? And so we had this big green candle for the 10-year Treasury yield, which means when this goes, this is moving in the same direction as yields, right? And so it looked like yields were going to go to the moon, and then they just kind of consolidated, made a slight higher high, and now it's week 17. This suggests that week 7 was the top. And we're now going to test the bottom of this range. So first stop, I would expect some support at 4.12. If that can't hold, then we're probably going to the bottom end of the range, which is below 4, right? That's around 3.88. So let's watch for this. It's week 17. This thing tends to have long weekly cycles. The one before this was 28 weeks. The one before that was 38. The one before that was also 38. So at week 17, this is another case where, maybe this bottom coincides with the Fed meeting, right? So that would be, let's see, just all speculation here. That would be week 24, and that wouldn't even be a very long weekly cycle for something like this. That's interesting. That's something to watch for. And so that means TLT is going to be moving in the opposite direction. So it's looking like TLT did make a weekly cycle low back on May 19th. We've been questioning this. Was this a real low? It looks like it is, right, on week 18. And that would make this current week, or the week that just passed, week 10. Look at this nice little swing low it's leaving behind, right? So that's a low at $83.87. And if you look at the daily chart, right, this appears to be about to break, like basically breaking out above this pivot, which would potentially take us to test $88.87. So this is looking good here. This is looking like we are moving up in a weekly cycle, but it is week 10, so it means we're not early in a new weekly cycle. That's important as well. What about oil? So oil is daily swing high. So daily swing high by closing below 68.45. And on the weekly chart, we have an ugly shooter, but it's still very green. The shelf that it has to stay above is around $64.70, that neighborhood. That's your big line in the sand. If it can't stay above that, then we might see a trip back down to like basically around 60 in that neighborhood. All right, we're going to move to crypto. So Bitcoin is trying to form a daily swing low here. So we've been dropping, and if it can close above $114,000.23, that will be a daily swing. And so that's your next kind of tactical thing that you're watching for. And on the weekly, what you want to understand is, are we in the process of a weekly cycle decline like the broader market? Did we top out on week 14? It's possible. You want to watch out for that. The weekly swing high is active below 115,700. So as long as we stay below that, we're potentially in weekly cycle decline. It does give you a very nice line in the sand. And for ETH, we just made a new high this weekly cycle. So this is actually, or this week, I should say. So this is a bearish outside weekly candle for ETH. The low on this candle is 33.54. So you just need to stay above that at this point. And if you think about the daily chart for ETH, the swing low would happen above 35.36, 77 and 77 cents. So call it $3,537, right? So we're not quite there yet. We're basically still inside the range of yesterday. I want to say with the market in decline, though, like that's a lot of downward pressure on this. So I'd wait for that to settle out. Now, gold is a very positive story. Nice swing low on Friday, right? Like, ooh, look at that. So nice swing low by closing above 33.34. And on the weekly, this is just a weird count. It looks like week 11, but most importantly, nice little hammer, right? Like, but look at this, just visually, this is all just consolidation, but this suggests to me that this is going to freaking explode, right? And look at the monthly chart on this thing. Look at these wicks, just frustrating action. This suggests that this thing is going to explode. And you have your first steps, right? This daily swing low, that's absolutely tradable. I think the cycles are just kind of weird. Now, silver is in a similar boat. We've talked about this. It hasn't been higher in like almost a decade, but we do have a weekly swing high in place for silver. That's important. As long as it stays below $37.96, that is a weekly swing high. A weekly swing high, right? Like you can see clear line in the sand here, like that. Boom. So got to get back above that. Very clear line in the sand. $37.96. So call it $38. And GDX, right? Like everything is kind of like doing its own thing. GDX closes a red candle, whereas for the weekly, but it's still just kind of inside this consolidation box for all intents and purposes. You got to stay above $51.37. That's your line in the sand for GDX. What about platinum? Platinum finally starting to break down here, giving people a chance to buy. It topped out on Monday, July 21st. Once price closed below $1,440.06, that was your daily swing high. And so you're getting a chance here. And equally important, look what we have. We have the makings of a daily swing low. We didn't get it yet. Friday, we had a nice, beautiful green hammer. The high of that candle is $1,323.31. As long as we can close above that, that is a daily swing low, right? Right? Like this nice little retracement, that gives you a chance that is totally tradable. So that's what you're watching for on Monday. On the weekly, what does that do? So on the weekly chart, we have a weekly swing high in place below $1,390.87. So as long as we're below that, the bigger bad news is we may be declining like in the weekly cycle. I guess it's actually technically that, because this is the candle that marks the high, right? And so you want to watch for a break above that. So as with nothing goes up in a straight line, everything has to pull back eventually. This is the pullback. Now you want to watch patiently and wait for that swing low at the right level, whatever, depending on your level of how aggressive you are. So that's platinum. Again, a break above $1,323.31 gives you a daily swing to play. Natural gas. Oof, looks like it's declining in the weekly cycle. This is just ugly. You have a doji of the weekly candle. The low is $2.94. The high is $3.15. Pretty simple. Well, below that low, you're in bad news. Above that, you got a swing low in place on the weekly chart, and you can do with that what you will. We will close out with uranium. So URA trying to form a swing low, very similar to platinum, right? We have this big gap, just like the markets on Friday, right? But we closed as a hammer. That's really promising. That's super promising, because that means if Monday can close above the high of this candle, which is $38.47, that gives us a daily swing, right? Same pattern on URNM. Well, in URNM, there's no gap actually. For URNM, it's got to close above $44.85. And for CCJ, would have to close above $73.63. The catch on these, though, is that we still have a weekly cycle decline that needs to play out. So this is CCJ, for example, week 16. And that's a really long weekly cycle rally for CCJ. It tends to rally closer to like 11 to 12 weeks. And so you still need to let that kind of play out. So this candle here, you're gonna let that kind of you're gonna need that to resolve on the weekly chart, is my sense. So those are all the updates. Weekly cycle decline has started, but that's good news. Be patient. Wait for the right swing low to buy. Thanks for watching.